Happy Friday, everybody. This is Jeff Hirsch here on Biz Talk Today TV. I'm editor-in-chief of the Stock Traders Almanac, and this is WealthWise. Today, I have Dan Passarelli as my featured guest, options guru, trading expert. I'll bring Dan on in just a few moments, but let's look at what's on my radar real quick. We'll pull up a chart here. See if we got that function. Yeah, perfect. So, I'm just going to look at this technical chart first here. There we go. S&P. Welcome to the worst 6 months, everybody. This is what everyone calls sell in May. We don't sell in May. We don't go away. We reposition in May. We're the keepers of the best 6 months. I like to say that you got to buy in October to get your portfolio sober before you sell in May, but we reposition in May. We just put out some information to subscribers in the last issue on the worst 6 month sectors, the best sectors of the worst 6 months. You can check it out in my newsletter at stocktradersalmanac.com. I'm still in the Qs and the IWMs from our April 17th recommendation to get back in. They're up nicely, about 13% for the Qs, 10% for the IWM. Holding the SGOV, some of the short bonds, that's the short bond ETF, and currencies for defense. We talked about the FXE, the FXF, and the FXJ, the Euro, Swiss franc, and Japanese yen ETFs. I believe the trade executed on my buy limit for the FXE last week, just a couple, maybe just yesterday, the day before. XLP, the consumer staples, looks good right here. I own that one. And we're looking to get the XLU and maybe some Bitcoin, maybe the IBIT, the IBIT, as I say, the ETF there on some pullbacks. I'm just going to move this over here a little bit. Where's my chart there? Here we go. So we're closing in on the 200-day moving averages here. This is just the S&P, but it's happening on the Dow, NASDAQ, and Russell 2000 also. But there's still some work to do. Everything's still down for the year, and that's got us a little concerned. The rally is definitely impressive, some strength there. Dow is actually the weakest from since the tariff tumble here. NASDAQ is making some progress. I'm not going to pull up that chart, but it's getting close. It's threatening. It's dancing with that resistance at 18,000. But we're still looking at this, sort of old school Republican post-election year weakness that's got my worst case scenario odds up to about 60%. But we've got the mid-year post-election year bounce in action here. You can see this sort of movement from April, May into this July peak, which kind of lines up nicely with the end of the tariff pause. So far, the tariff deals have been light. We're waiting on China. Everyone's waiting to see what happens over the weekend there. So, base case scenario still 8 to 12%. We're looking for some of this chop throughout the year. Worst case could be this sort of more negative, old school post-election year Republican weakness, or after an incumbent party loss in the red line and the green line here, where we're sort of flat to negative, maybe teetering on the bear recession territory. Not convinced, but for now, we're just going to ride this mid-year rally here. And just to zoom in on May a little bit, if you want to go to my blog, you can check out, I just posted this typical post-election year May, where we're sort of up for the first 6 days, a little sideways, and then we sort of rally briskly towards the end of May. So great time to reposition with the post-election year strength in May. So with that, I'm going to bring my friend in here, and Dan Passarelli. How you doing there, buddy? He is Go ahead.
Hey, what's up, man? How are you?
How you doing? Dan's the founder and CEO of Market Taker Mentoring. It's an options trading education firm. You've written 2 books. You've written more than 2, but 2 most notable, I think, Trading Option Greeks was recent, and The Market Taker's Edge. You were a equity options market maker. Not an easy job on the CBOE. You traded the ag options and the futures on the floor of the CBOT, the CBOT, Chicago Board of Trade. Now it's the CME. I've been down there when there was still some action, still it was hairy. You also host your own podcast, Wealth Building with Options. I'm going to be on that next week. You're a contributor to Bloomberg, Fox Biz, and a bunch of others. You do education for all the options exchanges. He's speaker at NASDAQ, Options Industry Council, CBOE, Fidelity, The Street, etc. I guess I just found out you're a marathon runner. We may have to talk about that. A musician, world traveler. So welcome, Dan. How you doing?
It's good to be here, man. Yeah, good to be here.
So let's go back in time. You know, we both have some salt and pepper, and I'm missing a few hairs up here. But when did you first get into trading, and where did you start? Where did it all happen? Where did it begin?
Oh man. Yeah, so I went to school in Chicago, and sometimes on my lunch breaks, I would go down to the Chicago Board of Trade building, and I would just like sit in the visitors gallery and watch and wonder. And so I just thought, man, it'd be kind of cool to work down there. And so after college, I printed up a stack of resumes, put on the only suit I had, knocked on every door of the building, and got a job as a runner.
Perfect.
So, yeah, right
That's
out
the
of
way you do
college.
it.
Yep,
I just had that conversation with my son. You got to pound of pavement, man.
And what did he say?
I was like, oh, I just called. You know, he left a message down there. I mean, he's out there. He's a musician like you, and I'm like, you got to go down there. You could be a runner, a bar back. You could hang out there on dead night. But
Yeah.
whatever.
Yeah.
So let me see if you got any war stories. You got any floor trader war stories? I know, you know, some people were there in '87 and the crash. What's the wildest thing you ever experienced on the floor?
Oh my
Or
God.
one of them? What comes to
Yeah.
mind?
Oh man, a lot of stuff. Just I'll tell you. Okay, so here's one. Right? Uh, you know, they say the more you learn, the more you earn. Right? You've been around the block a million times, like me or you, and I don't know about you. I assume it's true for you, but I'm still learning things. Right?
Oh yeah.
So this was
Learned something on August 8th and 9th.
yeah. No kidding. Right. So this is probably mid-career for me. I was probably at this point, I was one of the biggest traders in my pit at that time, right? And so this broker comes in. I forget what firm he's from. I think I remember, but I better not say it. And he comes in, he's like, oh, you know, what's the market in these Ford Motor Company options? So, you know, the whole pit's like, oh, we're this big. And before he could even get the offer out, he's like, sold, you know, sell you 1,000. And it's like, okay, bought 1,000. Okay. Guy comes back 2 hours later. Hey, you know, what's the market here? Before he can even get the offer out. Oh, okay, sell you 1,000, sell you 1,000. And it's like, wow, this guy's really selling a lot. So anyway, everybody in the pit buys just like thousands of these, right? And, you know, me and some of the bigger guys, it's just like tons. And I'm long, you know, for context, for those of you who are option traders listening to this, and you pay attention to the Greeks, I was long 80,000 Vega, which is it's just gigantic. So
80,000 anything's pretty big.
Yeah. So the market closes on this Friday or on this day, and the next day it's the X date of this really complicated deal where Ford was spinning off $20 worth of cash, and you could choose to get it this way or in shares. So it's the next X date, or the day after, it's the X date. And the implied volatility goes up like 2 points. So now, you know, for those of you who are, you know, options, because this is kind of option nerd stuff here.
I'm going to get into this in a minute, but go on.
Yeah. So if you're long 80,000 Vega and implied volatility goes up 2 points, you should be having a really good day. But this is one of those days when I learned from the black and the blue, ended up losing like $200,000 or something, you know, a few $100,000 because of the nature of this deal where if they spin off cash, the volatility is not actually on the cash. And so like the options sort of like readjust. And, you know, it was the whole pit just kind of got run over by this trade, and holy moly, that was quite a lesson. that was quite a lesson.
Wild. So that was a bad one,
Yeah,
right?
yeah,
So
yeah.
what about your greatest trade or one real
Uh,
winner that you nailed?
oh man. Well, yeah. Honestly, you know what, man? I must be some sort of weird person because I'm more embarrassed to talk about my great winning trades than my losing trades.
Humble.
Yeah, but there was this.
Humility is good.
Yeah, I guess. But I was renegotiating my contract with, like, shopping around, my deal to other firms, to get a backer. And I go in and the guy's like, yeah, bring your trading statements. And so I'm bringing my trading statement and I'm looking at it and I was like, oh, shit, man, I made $100,000 yesterday. And I'm like, and that is not a typical day, at all. It was
We are
by
talking
far,
about best trades here, greatest
yeah,
trade.
right. It's like, well, once in a lifetime scenario, it's like, shit, I made $100,000. Like, how am I even going to explain this? Like,
What was
because
the trade?
it was like a few weeks after that other trade, and me and the other guys in the pit figured it out, and it was pretty easy to claw back winnings on that. We all made back the hundreds of thousands of dollars
So it
we
was on the
lost.
Ford. It was on the Ford options.
Yeah. And to boot, I didn't really want to tell the guy because, like, at this point there was like different Ford options listed, and there was like an arbitrage scenario that I understood now. And I didn't want to tell the guy what it was because I didn't want to have his traders coming into the pit and trading it either. So, I just kind of brushed. He's like, oh, it looks like you had a good, oh, there must be something wrong here. I'm, oh, yeah, there must be something wrong.
So was that your greatest learning experience, your most humbling trade there?
Yeah. I mean, everybody's had a handful of these, and I definitely did have a handful of other ones. Learn from the winners and the losers, but yeah, that was for sure the most humbling one.
So what's this Vega?
Yeah,
Tell
yeah,
me
yeah,
about
yeah.
what's Vega?
Yeah, so like when it comes to option trading, when people first start getting into options, here's what they think. They think, oh, well, I think the stock's going up, so I'm going to buy a call. Okay, fine. But that's a pretty simplistic approach. The more you get into it, the more you realize, oh, well, there's also time that affects options, not just the stock going up. Oh, there's also this thing called implied volatility, which is a little more heady, but really important. And so Vega just measures how much your option position makes or loses as implied volatility goes up or down.
Not related to time.
Not related to time, but related to this thing. And it's funny. I'm actually in the process of writing another book, um, and I was just talking about implied volatility in the chapter that I was just writing, talking about how I wish they didn't call it implied volatility because it's just such
What is
a
it really?
yeah, well, really what it is it's the supply and demand component for option values. And it's kind of like I guess they call it implied. I mean, Fisher Black and Myron Scholes came up with this, name for
So
it.
is it like unbalanced volume?
A little bit. I mean, well, it's so the assumption is that people make buying and selling decisions about options based on their assumptions of future volatility, which, there's kind of something to that, like if I'm looking at a chart of the S&P 500 right here, which I am actually, as a matter of fact,
Yeah.
and
Talk to us. What do you
yeah,
see?
so say I'm thinking, and I'm just kind of coming up with an example here, right?
Right.
Say I'm thinking, oh man, we had this big rise. I think blah blah blah. I'm worried about the tariff thing with China being
Dud.
a dud. So I'm gonna buy some puts. Well, yeah, I mean, everybody and their brother is worried about that and probably wants to buy some puts. So when you're afraid of volatility in the future, that's when you're more apt to buy options. So it drives the price higher. So I guess that's why they call it implied volatility, because it's like the future volatility that's arguably implied.
So let's jump on that.
Yeah.
So you're concerned about the weekend news as I do a lot with Friday, Monday stuff. We know what happens on the weekend
Yeah.
can freak traders out or rock things. So let's say we're concerned about the S&P, looking at my seasonal chart where the middle of May is a little bit weaker, especially after this run up here, and we want to play the potential downside for the S&Ps. Instead of just buying some puts, what might you structure? What kind of options trade might you structure?
Yeah. So I mean, this is one that I've been looking at. It depends on if it's a trade or an investment. Like
Let's
to
talk
me,
trade right here.
yeah. So if I were just to go and buy puts because I thought that the market was going to come down, the big problem is that they're so darn expensive right now. So what I might do instead is buy a put spread.
Okay.
A put spread is when I buy one of those overpriced puts, but then I sell a lower strike, even more overpriced put, so that I'm overpaying here, but I'm benefiting from that overpayment here because I'm on the sell side, and it kind of balances it out. So
So
then,
that's like a put spread.
yeah, it's put spread. Yeah, yeah.
And if you were looking to maybe capitalize on that downside and get in there, do you just sell a naked put? That's like as good as buying a stock, right?
Well, I'll tell you what, Jeff. Let me switch hats here. Wait, I'm not wearing a hat. Do I have a hat around? I don't have a hat around. I usually have a hat in case I'm having a bad
I
day.
got one.
Hey, there you go. All right. I like that one too.
I'll bring you one.
Right. Okay. So switching over to my investor hat, I'll tell you what, man, that that is one of the main things that I've been doing is selling cash secured puts and covered calls. This is the best market for that I've ever seen in my
Wait,
life.
what's cash secured put mean?
Yeah. So now that we're thinking as an investor, like I will sell a put hoping that the stock goes down, which is kind of the opposite of what you would want to expect, hoping that the stock goes down and is trading just below that strike price
Mm-hmm.
at expiration. And if it is, then I'll get what's called a signed on those puts, and which means somebody puts the stock to me,
Right.
and I have to buy that stock.
That's
And
where that's where I would put a buy limit in below the market from the
yeah,
way I trade. Yeah.
yeah, exactly.
So
But
how is the cash secured?
yeah, so good question. So, and this is another one where if I were the king of options, I would name it something different because it's kind of a not really descriptive name. What's really secured is not really the put, but the buying the shares. You're taking some money and putting it aside in your brokerage account. Actually, your broker just does this all on the
You
back
got
end.
enough to cover what it costs for them to put the stock to you.
Boom. Yes,
So
exactly.
it's not margined.
Right.
You're not, yeah. So it's not
Yeah,
really a naked put.
exactly.
So let's reverse. Let's put on the brakes here. I'm getting excited about some of these trade options, these trade strategies here. Go back to the beginning. We've got some people that are getting into options that don't know anything about them. Where do you start? You mentioned covered calls a second ago. One of the old school ways to just what we used to do for the worst 6 months is you just sell covered calls against your stocks and lower your cost basis, which is a very conservative, probably the most conservative option strategy. Where do you start people off when they come to you to teach them about options?
Yeah. Well, if people come to me as wanting to learn how to trade as opposed to invest, right? Because if they want to learn how to invest, yeah, I'm going right into covered calls and cash secured puts because you get the most bang for your buck. They're the simplest, but you get so much miles out of them. I just go straight into spreads because like I don't know. This is another thing I was just writing about it in my book is there's not really basic, intermediate, and advanced options. There's
It's
this.
all advanced.
Yeah, yeah, right. Yeah, yeah. There's the stuff. Well, there's the stuff you got to know, and then there's the stuff that doesn't matter.
So what do you got to know?
Well, you have to know that there are these different components that affect your profitability. There's the underlying stock. There's the time to expiration. There's this implied volatility mystique thing, for a lot of people. And just the different ways that you can kind of massage all that stuff to put the stuff you want on your side and to get rid of the stuff you don't want.
So what's the stuff you don't need to worry about?
Yeah. So I mean, well, it's kind of what I want to or don't want to worry about. Like okay, so let's go to covered calls again. All right, just because they are the more simple one and the road tested, tried and true one. Like with covered call, like the one thing I know is that as time passes, options lose value, right? So I could be one of these people who just says, "Oh, I think the stock's going up. I'm going to buy a call," and then I lose because time passes, or I could put that information in my favor. I can own the stock and then sell a covered call, and I could actually make money as the stock goes up to the strike, but also make money on the covered call as time passes. It's just constructing
So
the
you're taking some premium.
yep, taking some premium, collect that time decay, and make money on the stock going up.
So you got a stock going up, you sell a covered call out of the money below the market.
I do sometimes, but I would say most of the time I give myself what I call room to run. So I sell it above the market, above where the stock is trading now, so that the stock has to go up in order for the stock to get called away.
And if it doesn't go up and it starts to go the other way,
That's actually okay. And to me, like this is
then
the
you get the stock away.
yeah, well, if it goes up through the strike price, I absolutely do. But if it doesn't, the option expires, and then I get to keep that option premium. So if the stock goes down, okay, I might lose on the stock, and I might lose more on the stock than I make on the option. But guess what? I just sell another option, and then I sell
So
the other.
that option expires, you keep the premium, and then you just do it again, and
Exactly.
you lower your cost basis.
Yeah.
So what's your view on the market right now? You've got some trades, some also some shorter term trades, and some longer term stuff. What's your overall view on the market? Are you buying this low, this bottom that's in, or not buying it specifically, but are you buying that it is in?
No, I don't. Well, the bottom may be in, but I don't think we go and make new highs anytime soon.
Mm-hmm.
I think the bottom may or may not be in. Okay. Like I don't know. But what I think is that we're going to continue to have some volatile moves, I think, for the next couple of months.
Mm-hmm.
Um,
That aligns. Yeah.
yeah. And it's just because there's so much there's just so much uncertainty. We had the Fed announcement on Wednesday, and I do like a daily video, for our people.
Mm-hmm.
And in my daily video, I'm like, well, here's what Powell said. Powell said, because, right? Because,
Because there's so much uncertainty.
yeah, yeah. I mean,
He
he's like,
actually he listed four. He was like, what did he say? Trade, taxes, regulation, and immigration. Where those are the four, I think those are the four areas where there's just massive uncertainty.
yeah. And so like the Fed doesn't know if they're going to be able to cut rates or if they're going to need to raise rates. They don't have no idea. And a lot of that has to do with tariffs. And what we hear is we're not getting a lot of certainty with that in any regard either. Like we had the big announcement yesterday that we've all been waiting for, like, yeah, we're going to rally the stock as soon as we get some clarity. Here's the clarity. What is the deal again?
Yeah, I mean, deal with the UK,
Yeah.
However, I'm with you on the chop and moving forward, but I think, the president and the administration is sort of gaming the market. They really came out hard and just threw a whole lot of stuff at everybody, and they're going to negotiate back to what they said they were going to start at in the future. So I think the big scare is past us, but the confusion still remains.
I am very much in agreement with you on that one as well. But what's not but in addition to that, what's interesting is that I also think the fear is out of the market, but we have the VIX still sitting at 2190 as of today's close.
Right.
So what that says is basically it says the market still believes that there will be volatility. And it's less fear than it was.
Could be upside volatility though.
Could be upside volatility as well. Right. So I don't know. I think we get both, which I love because that gives me the opportunity to sell calls when the market goes higher, to sell
So
puts when the market goes lower.
so what are you looking at right now? What trades are you looking at, or investments? I mean, you got sectors, stocks, the market. What's on your radar? What are you trading?
Yeah. So, I mean, I've always got a position on in SP 500, Apple, Amazon. I was just able to sell some calls in Amazon a couple days ago at a nice price. They expire next Friday, which is great.
Covered calls or
Covered calls, yes. Yeah. What else am I looking at here?
how
Looking
about
at
the AI? Nvidia, Palantir, that sort of tech area there. Those you know uh, uh, the ones that are on everyone's radar and none everyone's talking about.
Yeah, I mean, man, Palantir has been one that I have spent a lot of time looking at over the years. I was an early adopter in Palantir and I got in like a long time ago and sucked wind on those for at least a year for sure.
Uh-huh.
But then I was selling calls on them, selling calls on them, selling calls on them, and then covered calls. And then just last Friday, not today, but last Friday, I just finally let the stock get called away. So I'm finally out of Palantir for better or for worse. But you look at the PE ratio on that sucker, and I don't know.
Chart looks a little double toppy to me potentially too.
Yeah, it sure does. Yes.
Though what they're doing and their moat's pretty big, and pretty impressive. So,
Yeah.
um, so what are you bullish on right now?
I am, well, long term, just market in general. I've been acquiring shares from selling puts. Citigroup, GM, uh, AT&T has been surprisingly stronger. I've owned that for a while.
Yeah, we have that in our newsletter. Nice
Yep.
dividend too.
Oh yeah, I know. Sprouts Fresh Market is one that I'm
Okay.
always selling puts on, and that one I've made most of the money selling puts and not. I've wanted to get assigned actually, but even though it's up so much, it ended up not mattering because I was able to sell such rich puts that I could have been long it for all the premium I got. So yeah, those are some of the things that I'm looking at. CNR is a coal stock, core natural
Okay.
resources, which
What's your read on oil?
on oil in general, I don't know. I mean, oil itself, that one's a tougher one. I mean, that's we're gonna have to see if these tariffs do
Is
end
it
up having a
is it
negative effect.
is it above 60 today?
Yeah. Crude closed. Well, it's 6109 right now.
That seems to be kind of a line in the sand, that 60 level.
Yeah. So I don't know what to do with it at that point, but yeah.
So, tell me about your podcast. What am I in store for? What's when did you start it?
I started it I want to say about 2.5 months ago. And I don't know. I mean, I'm just, you know me, like I'm like, hey, I'm going to do a podcast.
Right.
uh, and it's, I was doing a little bit of looking around just yesterday and found out that it's already in the top 10% of podcasts. Uh,
Wow.
yeah, it's pretty crazy. So I don't know. There must be a lot of lousy podcasters out there or something. I don't know.
Thanks.
Yeah. Well, you just started. Yeah, I mean, a show like this, you're gonna be blowing me away, anytime. But my show is how I what so I'm writing this book on covered calls and cash cured puts, which is why it's just top of mind lately.
Right.
And so I came up with this brilliant idea, Jeff. Brilliant idea.
Humbly brilliant.
Humbly brilliant, yes. That I would, well, here's where I get humbled, but but I would do a podcast to chronicle writing the book. And I
Okay.
figured, yeah, I figured, hey, you know what, man? Like I'm already writing the
It
book.
sounds like one of those shows on Netflix or something.
Yeah, yes, yes, yes. But I figured it'd be so easy. And then I figured, oh, I'll do a substack. I'll do a podcast about the book and a substack about the podcast. And it's just all the same content. So it shouldn't take me any longer to do these other things. Oh boy, was I wrong.
Yes.
That brilliant idea didn't turn out to be so brilliant. I'm putting a lot of work into it, but I'll tell you, man, it is I am enjoying what I do so much more than I ever have before.
That's
Uh,
great.
yeah, yeah,
That's all that matters, man.
yeah. I'm just talking about my investments on the podcast, talking about, where, why one would sell covered calls, what the best way to do it is, how it works best, given techniques on how to do it. Um, and yeah, it's wealth building with options because it is that long-term view of how to better build wealth than just this traditional buy and hold by using options.
And do you talk about specific trades at all, or just technique and strategy and tactic?
I do on the Substack, I do talk about specific trades. What I do is I chronicle every single covered call or cash secured put that I make, including if it's like an adjustment, I'm closing one, I'm opening another. Like I put that out to the paid subscribers on Substack, which is
So,
practically.
so does that mean you're going to be doing a chapter in the book on me with our my appearance? You're
I,
going to cover seasonality in the book?
maybe you never know. You never know. Yeah, but actually, I'll tell you what, our listeners will definitely enjoy hearing about some seasonality. And I wonder how much we can tie in seasonality to, hey, this is typically a weaker period, might be better for this.
Yeah, I mean, and there's sector seasonal trades. I mean, we
Mhm.
we we've got a whole bunch of, each sector, each commodity, as you know from your old days, has its own personality, its own seasonal personality.
Yeah,
Things that are often overridden by force majeure or other forces. But
yeah.
I think options. I know a lot of my subscribers do, create their option strategies around some of our underlying, trades. Um, so yeah, it'll be interesting to see if we can build a few things, especially this time of year with this, you know, reposition in May, as I call it.
I like it. I like it.
So, you're a runner,
Yeah.
like
Not.
Forrest Gump running, or you run marathons or something? Where are you
Uh,
going?
yeah, yeah, yeah. So, I'll qualify it. I'm not a fast runner, which is why I run long distance. But yeah, yeah, I've run four marathons,
Full 26.2 mile marathons?
full 26.2. The last one I did was 2 years ago in Berlin. Uh,
Wow.
yeah, the Berlin Marathon. There's six major ones.
New
Chicago,
York.
yeah, New York, Chicago, Berlin, and I've done those three.
Wow.
And then what is it? London, Paris, and Tokyo.
What's your general time? Like
Ooh.
days?
Yeah, it feels like days. Uh, like the first couple I did was like 4 hours and
Eh,
25 minutes. So it's, it.
I did I did a mini triathlon
Ooh,
several years ago. Mini tri. You swim like a half a mile, you bike like 16, and then you run up like a 5K.
oh, cool.
Yeah, which was a
Yeah.
bunch of us did it together.
Oh,
Now I just hike and
love it.
walk 18 holes, try to catch a wave every now and then. Um, how does that relate the running to trading? I find it's meditation for me when I'm out in the trail. I come up with a lot of ideas. Some of them trade, some of them business marketing, some of it's personal, family stuff. What I'm gonna, I got to talk to my son about this or that. So I find a lot of solace and catharsis and inspiration once I get my blood moving, especially out in nature in the woods.
Yeah, that's actually where I came up with the idea for having the podcast on the book, because uh, what I do is I listen to a lot of podcasts and books on tape. They don't call them books on tape anymore, audiobooks.
Audio.
Got my Panasonic
Yeah,
thing.
there's that gray beard showing up.
Yeah. But yeah, I listen to a lot of podcasts and books and such when I run, which I don't know. I like it.
The only time I listen is when I'm on like the elliptical machine, and
Uh,
I mean, I was just saying to myself today, God bless Angus Young and AC/DC. It's just, you know, that's what, and there's other stuff too, but that's like right in the middle of it where I get going. I see a bass
mm,
and a six string behind you.
yes, sir.
Um, my younger son's quite an accomplished musician. He plays all those things too. So I was going to ask you, what instruments do you play? But I see them. What do you do with the music? Is that just you play out with publicly or just for yourself or what?
I spent about God, what was it, 10 or 12 years in a power pop band.
Power pop,
Yeah, yeah. So
like
that's like
Asia,
yeah, yeah. I mean, kind of in that vein.
arena rock.
Yeah, I mean, like Weezer, Badfinger, the Beatles. I see you got
Sure.
the poster in the back there.
Oh yeah, 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 yeah. That was a good. That was good. That was fun.
Yeah, yeah. So, but I quit that a couple years back, and now it's just I do a lot more listening than playing. But we played all over. We played, all over Chicago. We played New York. We played in
Fun.
London, Liverpool. Yeah.
My father was a musician and a
Oh,
composer, and
oh.
I find a big connection with recognizing market patterns and trends with music. Um, and it goes with engineers and musicians and stuff. I think there's a theme there for technical oriented, technician oriented people and chart watchers and pattern recognition people. So I think that's cool. And I'm a huge music fan. Just was out at the Sphere last month with some friends. So saw the Dead again.
Oh.
Um, so traveling, where are you off to next? We're going out to Yellowstone next summer, this coming summer, do some hiking. And I've been there a couple times. My wife has not, but she was looking to do some national park stuff. So we're gonna get on the trail. Where are
Oh.
you off to next?
Well, first of all, I love Yellowstone, and I saw the Dead at the Sphere about 6 months ago or whatever.
Last year.
That was the best concert experience. I don't know if it was the best concert. It was up there. But it was the
Well,
best concert
Bobby's
experience.
80 something, man.
Yeah,
Or he's 78, 9, whatever it is.
that I'll tell you. Anybody who ever gets a chance to see a concert at the Sphere, go.
I,
It's
I
worth it.
think the place was built for the Dead with
Oh
the
yeah,
yeah,
oh
with the
yeah,
with the light show. The yeah.
yeah. But where am I going? Jeez. Oh, you know what? Yeah, my next trip is in like a week and a half. But this one is kind of a strange adventure. I'm picking my son up who lives in uh, San Francisco.
Mm-hmm.
He's moving back from San Francisco to Chicago uh, to go to medical school at Loyola University here in
Nice.
Chicago. Yeah. So taking 80 all the way from Chicago to to
Coming back
San Fran,
90.
coming back. Yeah, I'm thinking I might come back because my mother's out in Vegas. So I might come back that way.
I did the trip west in '89. I went to Yellowstone with a buddy, and we went through Colorado, up through Yellowstone, then came back, and we pulled off outside of Chicago for the 1989 World Series.
Ooh.
I think it was like a Chili's we stopped at, and then the earthquake happened. You
Oh.
remember that the '89 October '89 earthquake in San Francisco? It was
Oh,
like, so there was no World Series. Had some nachos and moved on, but it was a pretty crazy trip.
oh.
So other than personal travel, we got any events coming up? You got your podcast. How do people find out about you? Markettaker.com. Is that what it is?
Yeah. Our website's markettaker.com. The podcast is Wealth Building with Options, and it's, on any podcast streaming service, just search Wealth Building with Options, Spotify, Apple, whatever you listen.
And you going to be speaking anywhere soon? Anything coming up? Am I going to see you at maybe the Orlando Money Show in October?
I don't think I have anything on the books right now, which
All right.
is, yeah.
Well, you're busy enough with the book and the podcast and teaching people how to trade. So,
yeah.
Well, this was fun, man. Thanks for coming by, Dan.
Yeah. Thanks for having me. This was a blast.
Excellent. All right, everybody. Thanks for joining me again. Happy Friday. I'm Jeff Hirsch. This is WealthWise on Biz Talk Today TV. And if you want to find out more about me or the Stock Traders Almanac, you go to stocktradersalmanac.com or at Almanac Trader on social, or just Google me, Google the Almanac, and you'll find it. So take it easy. Happy Friday.